You must have heard about the word index in the stock market. Today, let's discuss briefly about the various indices we have in Indian stock market. Think of this for a minute. Suppose you want to know how the Indian stock market is doing in general. Will you go and look at all the numbers related to each of the Indian stocks? Or if you want to know how the pharma sector is doing, will you go and look at the financial results of each of the pharma company? Same goes with any sector like automotive and finance. So the question here is, do we really have an indicator or a measure of how the market is doing in general? Is there any benchmark that gives us a fair idea of how the markets are going? Or a standard against which the other stocks are compared? Yes, there is. That indicator, that measure, that benchmark is called an index in the stock market. So in India, we have many indices. The first and foremost, the oldest one is the Sensex. We have Nifty. We have many more indices that we will discuss about. We have thousands of companies traded on the stock exchanges. But these indices that we will talk about only measure the performance of few top companies. It's like this. Imagine we have 300 students in a class. We want to know how this class is performing in general. We select only 50 students probably and look at their performance. That gives us a general idea of how the whole class is performing. Well, agreed, it may not give us an exact picture of the 1/12th student in particular, but we get an overall idea. So, what is an index? Index is a measure of the performance of a small portfolio of stocks which represent a bigger lot, a bigger market. We have many indices in the Indian stock market. The oldest one being Sensex, then Nifty, Nifty Next 50, Nifty Mid Cap, Nifty 500, Nifty Small Cap, Nifty 200, BSE 100, BSE Healthcare, Nifty Private Bank, BSE Infrastructure, BSE 500, BSE Auto, and many more indices. What we need to primarily understand is that a particular index refers to those relevant group of companies. For example, NSE Pharma Index refers to the pharma sector stocks that are traded on NSE. Let's not worry too much about the kind of indices we have in total, but for a beginner level, let's understand that Nifty is the index for the stocks on NSE Stock Exchange, and BSE Sensex or S&P BSE Sensex is the index for the stocks that are being traded on BSE. These are the two major indices. Let's talk about Sensex. Sensex is an index that measures the performance of the stocks that are traded on BSE. That is what we have discussed. Now, on BSE stock exchange, there are more than 5,000 stocks that are traded. But we don't take into account all the 5,000 stocks. Instead, we take a small collection of 30 large cap stocks to be included in Sensex. What do we mean by large cap stocks? To understand this, we have to first understand the meaning of the term market capitalization. So let's take this example wherein a company A, the promoters have put 100 rupees initially into the company as an initial investment. Later, they offered investment in this company to the public. Now investment is open to the public. So suppose, for example, they have put 900 rupees into this company. This 900 rupees that the public put into this company is nothing but the free floating market capitalization. Maybe they would have bought 90 shares of this company at 10 rupees each, amounting to a total of 900 rupees. So this 900 rupees that the public put into this company is nothing but the free floating market capitalization. This is also the market capitalization that I was referring to in the previous example. So from now on, throughout the presentation, whenever we refer to the term market capitalization, it is nothing but the free floating market capitalization, that is the amount that public put into the company and not the promoter's money or the government money. Now that we have learned what market capitalization of a company is, that is the number of shares times the price of each share, that is a market capitalization. So based on the amount of market capitalization, companies are broadly divided into large cap, mid cap and small cap companies. Large cap companies are the companies which have a market capitalization of greater than 20,000 crores. Mid cap companies are those which have market capitalization between 5,000 and 20,000 crores. Small cap companies are the companies which have a market cap of 5,000 crores, less than 5,000 crores. Coming back to our example of Sensex, tracking the performance of 30 large cap stocks, I hope you now understand what large cap stocks are. So Sensex basically tracks 30 very important large cap stocks traded on BSE. These 30 stocks are very liquid in nature. Sensex tracks such 30 companies. In the same manner, Nifty tracks 50 large cap stocks which are traded on the National Stock Exchange. So we have two important indices in the Indian stock market. One is Sensex, which tracks the performance of the stocks on BSE. We have Nifty, which tracks the performance of the stocks traded on NSE. Sensex basically tracks 30 large cap stocks which are traded on BSE. Nifty tracks these 30 companies, and in addition to the 30 companies, it tracks 20 more companies. So on the whole, Nifty tracks 50 companies that are traded on NSE. Let's take a quick look at the companies which constitute the Sensex, the industries to which these companies belong, and we also need to know that there is a component called weightage assigned to each of the companies. We will discuss about that later. Also, let's see what companies are there in Nifty. So, as discussed earlier, all the 30 companies which are tracked by Sensex, the same 30 companies are there in Nifty also. Additionally, there are 20 more companies in the Nifty. Let's look at the type of indices. We have benchmark indices. These are nothing but BSE, Sensex and Nifty 50. These are used for benchmarking or comparing the other stocks with this benchmark. Then we have the broad market indices like Nifty 100, Nifty 200. Nifty 100 is nothing but a list of the top 100 companies by market capitalization. Nifty 200 index is designed to reflect the behavior and performance of 200 large and mid-cap companies. Again, based solely on the market capitalization, we have Nifty large cap, mid cap, small cap, and BSE large cap, mid cap, and small cap indices. These indices are based only on the market capitalization. Then we have sectoral indices like Nifty Auto, Nifty Bank, Pharma, IT, BSE Bank X. There are about 12 sectoral indices. Then again we have thematic indices. These kind of indices are based on specific themes like Nifty infrastructure, energy, commodities, MNC, etc. We also have certain indices based on the strategy of investing. For example, we have high beta index, which reflects the performance of those stocks which exhibit greater volatility when compared to the benchmark index. Volatility means it fluctuates more often. We also have a high alpha stock index, which measures the performance of a portfolio of stocks which outperform the benchmark. So, beta stocks are nothing but those stocks which are more volatile compared to the benchmark. For example, if the stocks are having zero beta, it means that is not moving much when compared to the benchmark. Zero beta means the stock is moving along with the benchmark. Now let's discuss about alpha stocks. Alpha, if a stock is having high alpha, it means it is giving us excess return on investment after adjusting the market volatility. So this stock which has high alpha yields more return when compared to the benchmark. So alpha and beta are both measures used to compare and predict the returns. So let's not worry too much about these kind of other indices. As far as a beginner is concerned, all we are concerned about is the NSE index and the BSE index, and then we have sectoral indices like NSE, Nifty Bank, Nifty Auto, and so on. BSE Sensex, as we discussed earlier, consists of 30 very important large cap stocks of India by certain weightage. When these companies perform well, the Sensex goes up. When these companies don't perform well, the Sensex goes down. As simple as it sounds. Hence, there is a direct correlation between the performance of these companies, 30 companies, and the Sensex indicator. In short, Sensex is the pulse of the Indian stock market. The indices of the BSE are prefixed by the word S&P. Just don't get confused with this. S&P is just a brand name used by BSE for its indices. Because S&P, the Standard & Poor's, is an American credit rating agency that manages the BSE index. Just because this company is managing BSE index Sensex is also called S&P index. We have also discussed that Nifty tracks the performance of 50 companies. And we need to remember that whenever the performance of these companies goes up, then Nifty goes up. When the companies do not perform well, Nifty goes down. Hence, there is a direct correlation between the performance of these 50 companies and Nifty. Let's see how these indices are calculated. Let's take, for example, Nifty, the NSE index. Let's see how it is calculated. So when Nifty was introduced in 1995, they assumed a base number. This base number was 1000. Now when Nifty was introduced, it took into account a list of 50 companies. So each of the companies, they calculated the market capitalization. Market capitalization, as we discussed earlier, is nothing but the total number of shares in the market times the price of each share. So they calculated the market capitalization of each of the stocks which comprise the Nifty. Now they arrived at the total market capitalization. Now we have to understand a very important thing when we refer to the term market capitalization. It is nothing but the free floating market capitalization. That means the money that people, the public, put into the company and not the money which the promoters put. So free floating market capitalization is nothing but the total number of shares that are available to the public times the price of each share. That means on the whole, how much money did the public invest in this company, not the promoters or trustees and all those persons. Base market capitalization is nothing but the total market capitalization of all the companies in the Nifty at the time the Nifty index was established, that is in 1995, when they established this index, what is the total market capitalization of the companies? That is the base market capitalization. The base market capitalization when Nifty was established in 1995 was 2.06 trillion. For the ease of computation, I am simplifying the numbers. So when Nifty was established in 1995, the base market capitalization was 2 trillion and the base points were assumed as 1000. Now, as of May 2021, the market capitalization is 30 trillion. Now, how many base points would it come to? It's like a simple arithmetic problem. Like 2 mangoes cost 100 rupees, how many would 30 cost? The answer is 30 trillion divided by 2 trillion times 1000. That comes to 15,000. Please note that I have simplified the values for ease of calculation. These may not be the exact numbers of the market capitalization, but for the purpose of our example, we arrived at an index calculation of 15,000. So in 1995, Nifty was assumed to be 1000 points. Now in 2021, our calculation shows 15,000. This essentially means that Nifty increased by 15 times. This is because the base market capitalization increased 15 times. Let's look at the calculation of one more index. This time we will learn about a new term called weighted market capitalization. The Sensex was established in 1978. It took into account 30 large cap stocks. The market capitalizations of each of the stocks is calculated. But wait, not just the market capitalization, but the weighted market capitalization. Weighted market capitalization of a company is nothing but the percent weightage of the company's market cap relative to the total market cap. In other words, it's the proportion of the company's market capitalization when compared to the total market cap. Say for example, if a company's market capitalization is 5 crores and the total market cap is 10 crores, this means the weighted market capitalization of the company is 50%. So, weighted market capitalization of a company is nothing but market capitalization of the company divided by the total market cap times 100. Say for example, the market cap of a company is 100 crores and the total market capitalization of all the companies put together is 2500 crores. Then the weighted market cap of that particular company is 100 divided by 2500 times 100, which comes to 4. In this manner, the weighted market cap of each of the companies which comprise the Sensex is calculated. The sum total of all the weighted market capitalizations of the 30 companies in the Sensex is then taken as the base market capitalization. The same goes with our example of Nifty, where we discussed the calculation. The base market capitalization is nothing but the sum total of the weighted market capitalizations of each of the companies comprising the index. For the sake of simplicity, I introduced the term weighted market capitalization in this particular example instead of our previous discussion of Nifty calculation. When Sensex was introduced in 1978, the base market capitalization was around 2500 crores and the base points were assumed as 100. Remember, in Nifty calculation, the base points were assumed as 1000. Now, in 2021, the total market capitalization is 12,50,000 crores. Now let's get back to the same mathematics question. For 2500 crores, the base points were assumed as 100. For 12,50,000 crores, how many points should it be? The answer is 12,50,000 crores divided by 2500 crores times 100, which comes to 50,000. I hope I have given you the basic information related to the indices of Indian stock market. If you think you need to learn more on indices, please refer to the following website. Go to NSE website. Click on Products, Indices, About Indices, you can see all kinds of indices here. Nifty Indices website. Here you can see all the Nifty indices. Click on your index of interest, for example Nifty 100. This gives you all the information about the index, the description of the index, the constituents, the methodology, and the sectors in which it operates.